What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is September 18th of 2025. Well, folks, I hope you all are having a fantastic day wherever you are, and it feels good to be back here on the DataDash channel for a special update because I want to spend some time to do a big picture overview on where Bitcoin is at the moment, where the broader crypto market is as a whole, and also talk about the big macro picture. There have been a lot of moving pieces since we last spoke, and what a perfect time to catch up here considering the Fed's recent meeting yesterday. So I want to spend some time to digest all of this and try to give you guys an outlook on where I think things are heading over the next couple of months, the next year. We got a lot to unpack here in today's video. If you guys enjoy it, consider dropping a like. And again, if you guys are ever interested to keep up with me on a more active basis and you love the content that Paul's been putting out here on the channel, you guys can always check out datadashpro.com and sign up for the bundle subscription down below. I'll talk a little bit more about that later on. I want to spend some time, obviously, to talk to you guys about how we've been performing in equity markets. We're up on our portfolio around 87.7% this year, mainly due to exposure and our new emerging market leader stocks that have been outpacing Bitcoin as well as the broader stock indices, as well as altcoins. So we're going to talk about all that more later on. But let's go ahead and get here to the core subject matter at hand. I want to talk about Bitcoin in terms of performance over the last 9 months and also review the last few years and take a look at the inflow and outflow data that can really help us to get a picture about where we are right now and why I fundamentally believe we are going through a paradigm shift in the way that crypto operates in terms of the type of reward profile and risk profile to the upside and to the downside. So let's go ahead and talk about that. So since back at the start of the year, Bitcoin has brought in a clean 25% return from the beginning of 2025 to where we stand here today in mid-September. It's pretty crazy to think we're well over the majority of the year here in terms of 2025. And it is pretty incredible to think that even though we went through this whole kind of tariff scare back in March, as well as all the other macro elements that are going on, Bitcoin is still slowly but steadily grinding up here and setting new highs back here on August 14th. But at the same time, 25% is probably well below what a lot of people were expecting. This is definitely not the bull market that a lot of people were probably promised and the kind of crazy highs that you would have gotten listening to people like Plan B or other hyperbolic people or permabulls in the crypto space. So what's going on here? We're not getting some crazy flash crash in the market, but we're also not getting some euphoric bull market rally. This is something that we've talked about for a good period of time here on the channel, and that is that as crypto matures as an asset class, it is going to require extensive amounts more in liquidity to be able to make anywhere near the percentage moves it made in the past. Therefore, we are going to see a generally slower and lower return profile. But beyond that, as you have the wave of Bitcoin treasures, as you have ETFs, as you have all these institutional wings that are not coming in and speculating on the day-to-day but want fractional portfolio exposure to Bitcoin, you are going to see weaker corrections. You're not going to see as much leverage being used in the space, but rather people who are coming in on a much longer time frame and who have essentially the need to hold Bitcoin as a portion of their portfolio exposure rather than it being everything that they own. So they're more likely to go in and out of the market. So this is a very important dynamic to keep in mind here, that Bitcoin, as we just kind of step back into the long-term logarithmic chart, is going to be showing low return profiles. It's going to be stretching out over a longer period of time. And this is what we've already seen historically before the ETFs, before MicroStrategy even becoming a massive player in the space. This is just decaying returns that happen with each and every cycle. And in many cases, in prior cycles, we saw about a 5 times decay, meaning in this case, we had a nearly 60,000% return. We came down here to around 12,000%. Over here, we came down to 2,000%, which again is this kind of 1/5, 1/6 decay multiple. This time around, we've already had a phenomenal return bottom to top here, 700%. That's practically around only a third decay multiple here. And again, this is bringing into my point here that if Bitcoin has an upside roadmap here over the next couple of years, we should expect 2 things. One, that the corrections are going to get weaker, but along with that as well, that the upside is going to get weaker here. So this is a fundamental dynamic to keep in mind. This not only kind of plays with what we've seen historically, but I'm assuming here that we are going to see a dramatic reduction in the kind of corrective profile that Bitcoin has seen. I think we're not going to get anywhere near 70 to 80%. I would say something more in the ballpark maximum of 50%, maybe even something more moderate like multiple 20 to 30% corrections if we do kind of pace our way up and grind up, especially if Bitcoin plays as a hedge. I definitely recommend you guys check out Paul's 20-year cycle video. This was really interesting. This is something that originally kind of captivated me towards Paul's content back when he was doing YouTube back in the day on his own channel, and really got me interested in working with him on a deeper basis. But he did this whole video talking about how Bitcoin, basically might be similar to gold going into the 2008 recession. That we essentially could see Bitcoin emerge as this hedge if we go into a kind of global recession in 2027 to 2028 that aligns up with this 20-year housing market cycle theory. So I definitely recommend you guys check that after this video, of course. Definitely good food for thought on the kind of bullish case. But I definitely am open to that perspective. The fundamental thing here is that a lot of people are still thinking in the ways of the past. They're still thinking this idea that Bitcoin is just going to surge up. So I want to spend some time to talk about this here because we've got to obviously talk about the Bitcoin Treasury narrative. This has a lot to do with what's going on as well as the ETFs. The Bitcoin Treasury narrative is important because MicroStrategy, alongside a few other companies in the space, continue to purchase large swaths of Bitcoin. They just did another $217 million purchase back on September 8th. And this has continued to stack in their position, which has grown to hundreds of thousands of Bitcoin, over 638,000 Bitcoin at the time of this post. Because of that, this strategy narrative is, and not just per se strategy as a company, but Bitcoin Treasury narrative has played a pivotal role in helping with the supply and demand economics of Bitcoin. Beyond that as well, we also have the ETFs. Since back at the beginning of the year, the ETF inflows have definitely on a percentage basis slowed down quite significantly, but they're still churning along. Since the beginning of the year, so over the last 9.5 months, roughly speaking, we've been able to see just under around 200,000 additional Bitcoin being purchased in the ETFs. So on an annualized basis, we're talking about roughly an 18-20% increase in the amount of Bitcoin held in ETFs. And we could look at the global data, but the global data has not shifted much. It is mostly the IBIT, BlackRock, or iShares Bitcoin ETF that is really taking the majority of the flows. So even as companies like MicroStrategy are making these big dollar purchases, you start to notice here the amount of Bitcoin they're purchasing is slowing down. The amount of ETF inflows this year has definitely slowed down as well in that overall. And this has really played in to what we're seeing here in terms of annualized performance. We had obviously the pre-buying that was going on in anticipation of the ETF coming out of those bear market lows, a lot easier to get those higher percentage returns, then coming down to 121%. And so far this year, we're 9.5 months through the year now, we only have around a 25% return. Now, of course, I'm not here to be too negative or doom and gloom. That has still outpaced the majority of equities and let alone the majority of investment vehicles as a whole, real estate, you name it, right? But my point here is that this is definitely a concerning sign in the same way we had the lowest return profile here in 2021. Not to mention the similarities of long-term exacerbated sideways price action in terms of how Bitcoin has been acting this year. So this definitely, to me, opens up the idea that we may be in, at a minimum, for a neutral or red year going into 2026, depending on the macro environment and how Bitcoin inflows play out in terms of corporate treasury narrative as well as the ETF. But most importantly here, it's not meant to be doom and gloom. It's meant to point to the fact that the return profile, and this is something, even if you like Michael Saylor and you like Bitcoin as a whole, this is something that even Michael Saylor talks about, is how Bitcoin as an asset is going to be getting to essentially a return profile that's going to be in the lower or the kind of mid double-digit range over the next couple of years in terms of average annualized performance, right? So that already should be something you consider when the most bullish individual is starting to talk that way. And again, that's not negative. I mean, still, if you could do 50-60% a year, that is still going to heavily outpace equities. Question is, will we be able to maintain that here? Because right now, in this year, this is the second year here since we've had the ETFs launched, and we're only seeing a 25% return. So is that momentum here fizzling out in the short term? That's something to be a little bit cautionary about. So when we take a look at this longer term move and consider the annualized performance we've had a pretty great year, or great run up here since those 2022 lows. up 700%. I wouldn't be surprised if we get that 20-30% correction going into the next few months, especially if we see a follow through in terms of global equities, which have, again, like Bitcoin, been able to hold up strong here in the near term. Big reason why I say this here, my biggest red flag that has been popping up on my radar recently, and again, I hope this doesn't come across as me being doom and gloom. It's just me looking at how price action is responding. And again, what I think this is pointing to realistically in terms of like what it means for Bitcoin is probably a 30% correction over the next few months, is how MicroStrategy is trading in terms of its price. Look at the difference in how Strategy stock is trading against its 200-day moving average. Back when we had the initial all-time highs, or excuse me, they weren't technically, this would be the, well, if you go all the way back on MicroStrategy stock, way back in the day, generally speaking, actually technically it is all-time highs, so just want to clarify that. So we set the new all-time highs in its share price here, November 21st, 2024, at around, roughly speaking, $543 a share as the all-time high. We came down here to the 200-day moving average, and immediately both times saw strong, significant buy-side pressure here. To put it in perspective, buyers drove up the price around 38% the first time. The second time they did it, it drove prices up all the way here around right under 50%. And then after that, we had the strongest follow-through yet, rallying up here to 83%, stalling a little bit, but eventually coming up here to 96%. So it was looking very clear to a lot of traders and investors at the time that the show goes on, so to speak, that MicroStrategy would continue outpacing Bitcoin. It would continue trading at a higher premium. The Bitcoin Treasury narrative is just getting started. That's what a lot of people are thinking. But now, since back here in July, things have started to shift. Bitcoin has not only stalled in terms of price action, but MicroStrategy, rather than just stalling like it, is starting to decline quite substantially. To put that in perspective, in terms of percentage decline, it is down around 30%. And to make matters worse, the important thing beyond just doing price analysis is to look at how price is reacting with those moving averages, those key areas where smart money, institutional investors, or at least traders who are, a little bit about their wits, knowing to buy discounts rather than chasing FOMO, look at how they're reacting when price is coming down to the 200-day. They're not showing up. In fact, since back on August 20th, we have grinded below the 200-day moving average, roughly speaking. No immediate buy-side pressure, and if anything, we can't get above the 21-day moving average. We haven't been able to do that since we broke it back in late July. So it's almost been 2 months here. We have not been able to get above the 21-day moving average. That is a really bad sign. And the lack of reaction, the fact that we are teetering and almost treating the 200-day as resistance, is an even worse look in terms of price. Another way to look at it as well is you can divide MicroStrategy by Bitcoin. And that ratio, again, has gotten even worse here. I want to go ahead and again demonstrate this here in terms of the price of performance. Down 49%, down at those lows we had back in February against Bitcoin. And if we aren't able to hold at this range, we continue moving lower. This weakens MicroStrategy's ability to simply dilute more shares to go out and buy more Bitcoin. And is probably going to leave them in a position where the only option they really have in their kind of broader, I think it was their 82 strategy, which is like to buy $41 billion through essentially equity issuances in the stock, and then the other being convertible notes where they can go out and buy Bitcoin on debt. It's going to leave them probably leaning into the second portion of that, buying more Bitcoin on debt if they have to, which adds more and more risk as it increases the average entry price in Bitcoin, and beyond that, increases their debt profile. And that is the last thing MicroStrategy wants to do, because that increases their liquidation price, right? So if this premium continues to dwindle here, it is going to continue to limit MicroStrategy's options and increase its risk profile. So that is just a fundamental fact that you have to keep in mind here. That's not me trying to be doom and gloom. I think that alone is already going to give Bitcoin the room to go through a healthy correction. And if there is not significant buy-side pressure at that range, let alone MicroStrategy is the one doing it and they're borrowing capital to do it, that is going to spell really bad news. And that could shape up for a much larger correction if we go through some kind of global recession. I don't think, hopefully MicroStrategy is not going to do that. But at the end of the day, you never know. You never know how hot-headed people can get and how risk management can go wrong when you're trying to do something this big. I don't think people really understand just how big of a company MicroStrategy has grown to and how much risk they've been taking on buying more and more, right? So just keep that in mind here at the end of the day, guys. I don't mean to be negative, but I think that this premium is already just spelling that we're going to get that kind of healthier correction. We've already seen this. Like we see this many times here. We saw it back here from March 2024. We had a 33% correction. We had a correction here from January 2025 down here to these April lows. This is even typical in historic Bitcoin bull markets. The 30% pullback, that's a given. And you usually had more of them back, say, in 2017. But this is something that we expect as we move up here. So don't be too surprised if this is really going to become the new trajectory for Bitcoin in terms of a bullish case, or we just kind of grind up in a channel. We have these kind of corrective pullbacks, and the show goes on. That could be what happens for the next year or so, and it's not going to be some incredibly exciting triple-digit returning asset over 100% or more a year. It's going to be something much more moderate in the bullish thesis. Right? I think that's the only real case we have here for the bulls, is that we might move into that kind of environment. And the reason I opened myself up to this thesis that Bitcoin might continue somewhat is that when we take a look at Ethereum after a really explosive rally here, it's still holding on that 21-day moving average. Again, some clear signs of stalling here versus trending, but we've clearly seen that this is how crypto assets are trading now. Right? That you basically test the waters in the 21-day and see, hey, is it time to move higher? And if not, then we come down to the long-term moving averages, and then usually someone bids it up and drives prices up higher here. On the BTC ratio as well, we have come up here to the 100-month, which leaves me with a little bit of concern. It's holding up relatively well here, right? The other thing as well is that the Bitminer, this is the major corporate treasurer company, that's coming in and buying up a lot of Ethereum that's tied to Tom Lee and some other major crypto advocates. Their ratio has been kind of basing around here on the long-term moving averages. It's not declining significantly. So this, again, leaves it in a somewhat better position as well, fundamentally speaking, so long as that ratio is holding. Now, of course, one thing we haven't talked about here is other coins, or essentially talking about altcoins. So what's the gist here in terms of altcoins? We talked about Bitcoin, Ethereum being able to maintain those kind of relatively strong double-digit returns, keeping at pace with equities, maybe even slightly outperforming or underperforming depending on sentiment, but generally keeping pace here. What about other coins? Are we getting our so long and desired altcoin cycle that everyone's been waiting for? Well, the important thing that I want to bring up here is that others' dominance came into a very important range here, which was this general 6 to 8% range. And we came below the 100-month for a long streak here, pretty much the entirety of 2025. And now we're starting to see some important shifts here. We've gotten above all the long-term moving averages other than the 100-month. All right, so that's still sitting here. But if we're able to clear through there, I would probably say that there's the green light for others' dominance to rally up into the 200-day moving average, which gives us a nice relative return profile here. Nothing too wild, but something like we saw between November 2024 to December 2024, right? A nice short-term bump up, some that one which that would give you the opportunity to maybe make some solid 50%, 2x return trades. And I know that that's not life-changing wealth, but guys, the important thing that you need to really consider here, and I think Paul would probably tell you this as well, is that a 100% return in a very short window like that in a month or two is still very much life-changing. If you can nail down 2 or 3 of those, right, you are going to be compounding your wealth, right? And that doesn't even mean you have to do it all in a year, right? You don't have to make all these trades a year. If you can do that consistently with sizable capital, even if you're starting out small, right, but with a sizable percentage of your portfolio, you will start to be able to see your wealth compounding if you can be patient and wait for those trades. So for me personally, I'm not entirely sold yet. I think a final kind of sign-off would be a weekly close above the 100-month, which we've just not been able to do since we broke through it. So keep that in mind here. That would be for me kind of the sign that I would potentially dabble in some altcoins, because you've got 2 whole entire percentages of dominance, and that's about a 25% expansion in nominal terms for the broader altcoin space in terms of its existing size. Not to mention if Bitcoin is trending higher, that plays even more in favor to the kind of return profile you can make in dollar terms for these altcoins. But As we're on this topic here, guys, I want to talk about two things here. One, I know some of you, obviously, you probably are loving Paul's content in this case. I know Paul's been crushing as a recent, but I know some of you who have followed the channel for a long time probably miss seeing some of my videos. And beyond that as well, you might be wondering, Nick, we're talking a lot about crypto markets. Where are you focused right now? Like, where are you positioned? Are you still actively trading at the moment? Are you putting positions in crypto or elsewhere? And I got to be honest with you guys, as you've probably picked up from the last year or so, on the channel when I did come on here and talk to you guys, I've really been disinterested in crypto. And the reason for that is because I think unless you're someone like Paul who has a really refined strategy, who is using, moderate degrees of leverage, or more than anything, a clear risk management strategy when he's going on and trading on much shorter time frames than probably what I'm more comfortable with, in that case, stick with Paul's strategy. He's been doing phenomenal. But in terms of kind of the longer term kind of swing trade or kind of cycle investing, for me personally, Bitcoin and Ethereum are just not really in the kind of return profile that I'm interested in right now, let alone dabbling in the thousands of altcoins that are trampling over each other to get some degree of attention, when in reality, insiders, team members, early stage investors, people who are generating new narratives in the altcoin space are just looking at any opportunity to sell. And if you don't believe me, just take a look at the fact that we've been in a dominance downtrend for other coins, right? The broader amount of altcoins, excluding the top 10 cryptos. Each and every time we've had lower highs here. And that to me really limits my excitement when there's just not the kind of return profile we used to get in altcoins. Not to say that you can't make some great returns. I would totally be open to a trade like this going into the 200 week if we get the right signs. But my point here is that I've been able so far this year to consistently outpace Bitcoin and the broader range of cryptocurrencies by simply being invested in the right stocks. We've been invested in a lot of stocks like a TIE, which we bought back in July of 2024 around 145, 150, and have now been trading up here to 460. It's more than a 3x here, 200% return in that window of time. And for perspective's sake, consider we've held it for some time. If you put it in terms of ratio, that's over 63% from when we entered to where it is now against the performance of Bitcoin during that time window. I know a lot of people as well who even bought down here at the lower end of the range here, right? And are up massively against Bitcoin during that window of time. There's also stocks like Bloom Energy, which we bought back here around 20 bucks back around May or June. And during that window of time, we have been able to see the stock go up 300%, 4x against Bitcoin. Now, I'll be directly honest with you, we've taken profits along the way here on the stock, so we haven't held it entirely through that move. But we have far outpaced Bitcoin here, in nominal terms, probably around 80 to 100%. So my point here is that at the end of the day, there's definitely going to be a safe return profile. If you are passive investing in the market, then in that case, Bitcoin, Ethereum has a very good chance, or at least an equitable chance, to outpace equities in terms of passive investing. If you're just buying the S&P 500 or you're just buying Bitcoin, chances are Bitcoin over the next year, if not the next year, maybe the next 2, 3, 4, 5 years, is probably going to perform just as good. Considering the market's scale potential, if we see Bitcoin Treasury inflows and ETF flows continuing to remain as they are, right, there's a good chance that that could happen. But just right now, it's very clear here that there is not the kind of exciting return profile in what's going on in terms of crypto, in terms of the broader altcoin space. There's just too much dilution. There's not strong fundamentals. There's not a new wave of users and liquidity coming in, and not a wave of new use cases that I can find that are really, genuinely satisfying for investor interest. We are seeing a lot of those institutional inflows concentrate into Bitcoin and Ethereum. So I would stick with those. If you're going to invest in crypto, play the safe bets. Follow people like Paul who are going to help you to navigate when altcoin cycle or altcoin rally opportunities present themselves. That's a very big thing here. And this is, again, a big reason why I talk about DataDash Pro, because this is where both Paul and I are still contributing. For me, I got tired of creating kind of the day-to-day content here, guys, on the channel, especially focusing on crypto. But for me, there's a ton of opportunities out there in terms of equities. Not only do you have someone like Paul, who's doing a really great job covering the crypto space, but beyond that as well, you also have the opportunity to follow my newsletter, where I'm going out there and following a lot of the different equity sectors, a lot of emerging market leaders, small mid-cap stocks that have that market cap potential potential and the multiple potential to be able to go up 3, 5, 10x over the next couple of years, and to be able to really make those generational returns that we used to make in altcoins. So I think that's, again, a very important thing to keep in mind here in terms of how you're going about investing or trading in the market. You'll get access in the bundle subscription to Paul's Trader Club in this case, where he's going to be going and showing you how he actually does technical analysis in the market. A lot of the patterns you'll see in the video, how he goes about doing this on an actionable basis, setting up proper risk management, and being able to actually have trade setups that if they go south, it's not a problem. If they go right, can really generate solid returns, and are usual institutional entry points that are going to lower the chances of the trade not succeeding. But beyond that as well, you guys will be able to get the newsletter where you'll be able to get my insights on markets, where you'll be able to see some of these emerging market leaders, and you'll be able to figure out, maybe you want to try one of the trading styles, or you might find that it's a great mixture of both. The crypto exposure in terms of what Paul's covering, and the kind of macro perspective where we do cover crypto, but we also cover equities, commodities, and Forex markets, and we do mid-month webinars and have a discussion group you guys can join in as well on Telegram, where you guys can get access to that as well. So there's a lot to offer here, and you get to save $228 annually if you do the bundle subscription. So if you guys are interested, check out the link down below in the description. It's a great way to support what Paul and I are doing here in the channel. We love doing what we do for you guys, and this really helps us go forward in being able to do it, and really to help you, I think, filter out a lot of the noise in terms of financial investing. The last thing I wanted to go ahead and talk about here in terms of what's going on in equity markets is some of the key charts. I want to take a look at the macro perspective here. I want to take a look at volatility, the indices, what's really going on here. The first thing I want to talk about here is that volatility is continuously on a downtrend here. The big change we've seen is that volatility has started to flatline along this potential emerging line that we've had since back here in July 2024. So that is something to keep note of here, that while volatility is relatively low, it has stopped declining as substantially as before since that rise in April when we had the tariff correction. And volatility is an inverse measure usually of the performance of equities, meaning that as volatility is declining, usually we're going to see equities moving higher. So right now, volatility remains low. There is no major red flags here, no signs of concern, other than the fact that we've just set a generally higher low here in terms of volatility historically since back in 2024. If that breaks, that's another positive sign for the bulls, that we've got even more euphoria here in the near term. It doesn't mean for the next 2 or 3 years, it just means that at least as of now, the bulls are in charge, and we are continuing to see that here. You can also see that in terms of the performance of the indices, whether you're looking at the S&P 500, whether you're looking at the NASDAQ, whether you're looking at the Dow Jones, the Russell 2000, all of them are doing really well. And that's the same here again with Bitcoin and Ethereum. They're either holding their gains or moving higher. If you're taking a look at gold as well, gold accumulated sideways here for a general window of time throughout the majority of 2025, and then just sprung up again and is not showing any fade in terms of its price action. These are all positive signs right now in terms of equities. However, I know a lot of people have had the question mark on their mind about the FOMC meeting. A lot of people are wondering now with the Fed coming in with the September rate cut, a lot of people wondering, is this a buy the hype, sell the news type event, or is this time for us to, essentially fill up the punch bowl, party like it's 1999 and we're going to blast off into the sky? I really don't know if it's either one of those, and I don't like to trade off of these type of events simply off of what I expect other people to be thinking in the market, right? A lot of people try to counter trade the broader sentiment. Oh, everyone's thinking that this is going to be the point where stocks rally, therefore I need to sell, or this is a period where everyone's going to start selling, but it's really going to be a period that actually, stocks rally and crypto rallies. At the end of the day, guys, this is something that markets had priced in for a while with the job revisions. Clearly, markets are not worried at all right now. We got a 1.6% gap down here on August 1st, and it got bought right back up. The respect of the 21-day is like nonstop here. So right now, my key thing is to not get euphoric. We've got a healthy cash position. We've been taking profits along the way throughout 2025 as we've had a really phenomenal year. However, at the same time, I'm not trying to counter trend trade here. I'm not trying to essentially bet against the market. The market's strong right now, and it's clearly signaling that it's either factoring in probably one of multiple things. One, that the dollar right now is being generally debased against other world currencies. That means that you're going to see an upward performance in equities to some extent. If the dollar's going down here, asset prices are going to factor in for a weaker dollar. That's one. The second is that AI, the general sentiment around AI is still strong. Oracle had a massive earnings pop here, and while it's faded a little bit since that daily close, I mean, this was a 35% move on a major tech giant. Billions of dollars, hundreds of billions of dollars just created overnight in terms of equity value, right? So there is a lot of optimism still right now in terms of the equity plays. Bloom Energy is actually one of those plays as well that benefited from Oracle rallying, as they've been essentially signing a massive partnership with Oracle. You're seeing all these different energy-related plays. You're seeing tech plays, huge stock moves. Still, no signs of significant slowdown right now. I'm not saying that can't change, but right now, sentiment and confidence is riding high. And you just see that across the broader spectrum here. You've got some tech companies like Apple and Microsoft, that are not doing anything crazy, but they're still holding up relatively well. And if you take a look at the majority of equities, you are seeing a generally positive sentiment overall. So we aren't seeing any major red flags here in terms of equities. Volatility is still relatively low. Oil right now is holding neutral in this cheap zone here, but it's not going down into the the kind of $30, $40 range here that would signify significant recessionary pressure. Just right now is providing that cushion to keep inflation low, allow for interest rate cuts, etc. So right now, as I look across the board, I'm not seeing anything that's too concerning. I see equity markets are adjusting for a weaker dollar. They're continuing to remain relatively optimistic in terms of the future outlook for AI and how that's going to help companies to cut costs and be able to further automate processes and open up new market opportunities. Again, whether or not that really manifests, that's what the market's pricing at now. We can't really fight that trend, if you understand what I'm saying. We're supposed to ride along with what the market's signaling us. However, if we start to see that shift, if we start to see the 21-day not being respected, if we come down here into the long-term moving averages and maybe look for some great entry opportunities if that opportunity presents itself, but buying activity is not very strong, that's when I'm going to be concerned. But as of now, we've broken through the generational line of resistance, the 95-year-long line of resistance on the S&P 500, which is one of the best benchmarks for equities. We've seen the same as well for the NASDAQ breaking through its two prior highs against the dot-com bubble and the COVID highs, and we are just springing right up through it like nobody's business. So right now, we're taking opportunities in the market. Any dips that we get on strong names, we're buying them. And we're trying to stick to these market leaders that have continued to help us outperform the broader trends of equities and crypto as a whole. So long as we stick to that, I'm pretty confident we're going to be having another great few months here into the close of the year. And along with it as well, hopefully a good 2026. It all just depends on how markets play out over the next few months and when we start to see those initial signs of concern in terms of performance. And if you guys want to know when I'm getting into positions, when I'm getting out, that's where, again, DataDash Pro can be a really great help. If you want to just sign up for the newsletter, that's okay. That's where you can just get my content. But I highly recommend you guys check out the bundle. Paul's got a lot of really great stuff as well. We wouldn't have him again on this channel if I didn't believe in Paul. Paul's been crushing it this year. I would say he's doing equitably as good as me, if not better. He's been nailing some really solid trades, being long on ETH, really nailing the bottom with the shark pattern that he predicted. All these things, again, really give you a good foundation in terms of approaching markets. There's a lot of noise out there. Focus in on the signal. Lean into a few people. You don't have to just lean into Paul and myself. Definitely follow some other people as well. But, beyond trusting your own instincts and your own knowledge, have a handful of people who are really serious, who are not hyperbolic, and are actually helping you to navigate the changing environment and give you some kind of strategy to be able to navigate it. Because if you can find your edge in the market, that is going to help you to be able to outpace things long term. Otherwise, you might as well passive invest. So in this month's edition of the Dash Report, I actually talked about how I approach markets, how I find new market leaders, things like that. So it could be a great place for you guys to start if you're looking for that. And Paul's Discord's got a really great active community as well that could really help you in getting started in your journey as well. So check out the link down below in the description, guys. Thank you so much for giving me some time to ramble on. In kind of broad summary here, stick to Bitcoin, stick to Ethereum. If you are going to be buying crypto assets, try to find them on those 30% discount windows. I think we've got a chance of that playing out here in the near term with the weakening flows of the ETFs and the treasuries, as that narrative is starting to teeter a little bit here in the near term, and we're not seeing as much institutional interest at current prices. Altcoins, wait until that break above the 100 month. And in terms of equities, there's a lot of opportunity out there that is going to outpace crypto probably in the next few months. So stay in tune with those opportunities. Check out DataDash Pro if you guys are interested. And I'll see you guys right back here on the channel in the next video. Take care, everyone.